Welcome back, everyone. Today, we'll be looking at a test question on reporting. We have not one, not two, but 4 questions to practice today. Typically, the exam will only feature one of these questions. However, because practice makes perfect, let's go all out and practice with 4 of them. As always, let's start by reading the requirements. For each of the above issues, discuss the issue and describe the impact on the auditor's report, if any, should these issues remain unresolved. This question is worth 20 marks. Since the question consists of 4 parts, each part will be worth 5 marks. Now, the requirement asks about issues and their impact. Does that sound familiar? Yep, you got it. We just learned about this in the last lesson. Remember this handy framework? When the exam question describes an issue, students could talk about accounting implications arising from the issue, the materiality of the issue, if there are any audit risks involved, as well as the audit evidence and procedures that they can use to substantiate the issue. When it comes to the impact of the issues on the audit report, students must first identify whether it's a disagreement or scope limitation. If the matter is pervasive or non-pervasive, what should the audit opinion be on it? Do any additional communications need to be included? If the question is worth 5 marks, you can score 4 to 5 points for both identifying and explaining the issue and its impact. Detailing these things can easily allow you to score a full 5 marks. Ready? Okay, let's take a look at our first scenario. You are the audit manager. You are currently reviewing the audit files for a few of your clients for which the audit fieldwork is complete. The audit senior has raised the following issues. At Daisy Co., after the year's end, the company's sales ledger has been corrupted by a computer virus. Daisy Co.'s finance director was able to produce the financial statements before this occurred. However, the audit team has been unable to access the sales ledger to undertake detailed testing of revenue or year-end receivables. All other accounting records are unaffected. However, no backups are available for the sales ledger. Daisy Co.'s revenue is $15.6 million. Its receivables are $3.4 million, and its pre-tax profit is $2 million. Okay, so let's see. What is the issue we have here? Well, the sales ledger has been corrupted. This means there is no evidence of Daisy Co.'s revenue and receivables. So, would this make it a disagreement or a scope limitation? Well, as the auditor cannot collect evidence to perform testing, this issue is a scope limitation due to insufficient evidence. Now, is this issue material or not? Well, if we look at the amount of revenue that auditors could not test for, which is $15.6 million, and compare it against Daisy Co.'s profit of $2 million, we can observe revenue that is almost 8 times their profit. Don't forget, we also have untested receivables worth $3.4 million, which would make it about 170% of Daisy Co.'s profit. With these large numbers, we can safely say that this matter is material. To tackle this issue, what can auditors do regarding audit evidence and procedures? Let's think. There may be alternative records for revenue and receivables stored somewhere else. Therefore, it may be worthwhile for auditors to discuss that possibility with management. Perhaps auditors could also try collecting alternative evidence by performing analytical procedures. Additionally, the client could also request confirmation from their customers on revenue and receivables to help auditors collect evidence. However, if auditors still fail to obtain sufficient evidence even after trying all of the above procedures, we need to ask ourselves, what impact would the missing evidence have on the audit report? Well, we already know that this issue is a scope limitation and material. So, is this matter pervasive or non-pervasive? Just looking at it from a simple P&L perspective, this issue would impact revenue and profit. In the balance sheet, it would impact receivables and retained earnings. These are big-ticket items in a company's financial statements, so this issue is pervasive. So, what kind of opinion does an auditor give when it comes to pervasive matters arising from a scope limitation? Yep, you got it! The auditor will have to give a disclaimer of opinion. This means the auditor will not be able to express an opinion. In the exams, on top of stating what the opinion is in the answer, it's also good to include the basis of the opinion, i.e., the reason why this particular opinion is given. In Daisy Co's case, the basis of the opinion is the limited evidence for revenue and receivables.